The Bitcoin halving is fast approaching, just a mere 9 days away. How is the crypto market reacting to this fantastic news? You can see not very well. Naughty crypto. In fact, total crypto market cap has come down 3.41%. It's now standing at $2.58 trillion. We're currently 99.3% of the way towards the halving. I'll go through in this video what's coming up, what you can expect, and what's happening underneath the hood. Let's run the numbers. Always keep your eye on CTKS structure. Moving between those levels determines the price waves that occur inside market charts, and you interpret one the same as the other. You interpret silver the same as you would interpret Solana, the same as gold, and the same as anything that you would look at. If you would like to learn the CTKS method, which gives you the world's only leading indicator of price, where you can make money from literally any market, I'm giving a very selective number of people a scholarship to level 1 and level 2 standard certification. That's where you can learn how to do all of this yourself, and it is the world's most powerful buy and sell level detection system. I'll be awarding a very limited number of partial scholarships to level 1 and level 2 standard certification. A lot of people think that applying level 1 and level 2 standard certification is very straightforward. After all, they're just horizontal lines, or are they? Level 1 will give you the foundation of what you need to know, but it's level 2 where all the magic occurs. Literally, inside level 2 standard certification, you learn everything about drawing those lines up, and you can see it's not so simplistic. It actually is the world's most advanced methodology of determining where smart money is buying and selling, and it will give you X-ray vision. If you're interested in the partial scholarship, please reach out to me. My contact details are in the link section on YouTube. You just click that and you'll find that you can just directly message me on Twitter. Just use that link there. Let's get into applying the CTKS method in practice. When we look at total crypto market cap, we can see just at the start of April, total crypto market cap came down pretty severely for about 3 days. And then what did it do? It absolutely rallied. A lot of people would say, oh, I wish I bought at the bottom there, but nobody was there except for the professionals. When you see big negative red action like this, the first thing that people want to do is run away. They get angry, they switch off, they put their foot through their computer screen, or throw their phone out the window, never realizing that this negative price action is required for positive price action. Price is always moving in a wave. Please don't be scared of the red. Learn to look at it as a professional does. That is, getting on the right side of the percentage. Let's turn on the CTKS indicator and see what's cooking inside market structure. These levels are very significant, and I was saying before, how you read these structural levels is the same no matter what chart you're looking at. Here we're looking at total crypto market cap, but you could be looking at gold or silver or Forex or anything. It's always the same. And if you're inside the service, check out what happened to Tesla in the past trading session. And talking about that, all of the charts for the main Tier 1, Tier 2, and Tier 3 charts have been released inside the service. There's a video that's been released as well, explaining those price paths. Now, let's have a look at total crypto market cap. Between $2.54 and $2.58 trillion, there was an enormous amount of structural resistance in the crypto market. We found that at the start of April we were above that, but we failed to get through this structure. And if we can't get through the structure, we're going down to lower congregations of safety nets. And we've seen the crypto market get caught by the $2.4 trillion safety net and just a little under the $2.37 trillion safety net. What we've seen here is something that you want to pay a lot of attention to. When you look at a safety net, its purpose is to slow down or to reverse price. We've seen the price reversal at just around that $2.341 trillion mark, and we've seen price get caught here before. If we get more sell-offs, we would expect price to reverse around this $2.341 trillion mark. Just please keep that in mind. That's the negative scenario. As part of our risk management, we always look at the structural levels. They're gravitational by nature, and these are really strong. That means it can pull price back into this $2.54 trillion area. And you might be saying, Ken, why am I looking at this? I just want to trade Solana or some random meme coin. I don't want to look at total crypto market cap. Who cares? You really should care, because as a professional, and it's important that you see yourself as such, professionals look high and wide. They need to know what the market is doing, and this is literally the entire crypto market. You can see what's happening to it right now. We can see all the structure inside the market is up here. And if crypto manages to grind through all of this and get above 2.6 trillion, oh baby, it's on. The Bitcoin halving is coming up, and a lot of people misunderstand what negative price action is. It's actually calling in the shorts. When price goes down, people try to short to make money. When they short, if they get stopped out or they get liquidated, that forces them to become buyers inside the market. So you can see long liquidations cause spikes down and short liquidations cause spikes up. We really want short liquidations, and the bears want long liquidations like this. But you will find at all times, long and short liquidations are just everywhere. If the price goes negative on Bitcoin before the halving, that's completely expected. We've seen that many times in the past, and it's just calling the shorts in. So if you're shorting Bitcoin and crypto, be really careful, because when things get going, you are likely to get decimated. I'd like to say a big thank you to Doomy, who just reached out and shared this beautiful comment on YouTube. Doomy was talking about the fact that he got caught into Moon Boys, who always have one proposition: everything's going to the moon. Hence the word Moon Boys. Doomy recounts his particular experience of crypto, which was resultant in a lot of blowing up of capital. Then one day, Mr. Ken gave me a partial scholarship to the CTKS method Level 1 and Level 2 standard certification. I applied and got the partial scholarship. I mark up charts now and enter trades at SLs, which are those dotted lines that you see inside the charts. And I set and take profit and sell at the SLs at the same time. Now I make money. I highly recommend applying for the partial scholarship. Thank you, my friend, for sharing your story, and if you'd like to pause it, it's a really, really good share. And congratulations on your journey into self-employment, my friend. People often say they're in it for the technology, but let's be serious, we're in it for the profit, and there's nothing wrong with that. I'd also like to thank TF Theta, who reached out and said in the comments on the last YouTube, the masterclass has been a life and game changer. Flying blind in the market is over, as the CTKS method analysis is truly the eye-opener to the market price moves. It provides the necessary method to have confidence in trading no matter what we trade. Thank you for your share, my friend. And thank you to everybody that watches and comments. You're just awesome people. Eventually, Bitcoin and crypto will become a household name. I shared this AVAX trade inside the CTKS method monthly service video. What you can see here is a $634 profit after AVAX was coming down. You don't have to get a big percentage move up to make big dollars. This is something that you want to bear in mind. And you also don't have to pin the bottom and pin the top. That's not important at all. You can definitely make a lot of money inside the markets. They're literally money printing machines, but you must know what you're doing. The CTKS method is the world's most powerful smart money buy and sell level detection system. Having a look at Bitcoin, we can see that there was a big structural level at 71,785. Now, what about what's happening inside price structure? I'll just explain it. Often what occurs when there's an explosive movement up, and especially through a positive fresh air gap, these structural levels become magnetized, and you can see how price just hung around that 71,800 mark. What you need to know is how price actually behaves. This is a positive retest, that's a pass, but this one is a fail because we made a lower low here. That meant we were putting in play this particular level here right there. So when you know how to read structure, you'll never look at a chart the same way again. What happened here, we tried to get over this structural level. We tried to come back and retest and resume upwards, but it failed. You can see that high, that's a high, but this one is lower than that one. So this is a lower high. We had a higher high there, but unfortunately it didn't retest and push forward. That meant the lower level was getting put in play. This is exactly why the CTKS method is the world's leading indicator of price. Now let's go forward a bit in time and look at how these structural levels are playing out. Let's go forward in time. So what we see here, that structure that we saw all the way back here came true, and also we notice, I'll just go forward a little bit more in time so that you can see how these gravitational areas actually capture price, and I'll show you how to interpret them as well. When we look at this level above 70,200, we came through it and sliced down to a lower structural support level and then tried to come back up. We did a positive retest, but we couldn't hold it. We couldn't resume back up to the 71,800. That meant that we were coming back to the one below. If we can't get above that and positively retest above, we're going to the one below. And you can see what you want is a clustering of structural support levels. It's so important. I'll just take you forward to the current time. We've seen that these two structural levels, they act as safety nets, and that's what I always call them because they are. They're literally, when price sells down, you know where the structural levels are through the CTKS method, and this is what you can learn inside Level 1 and Level 2 International Standard Certification. One thing that we saw, we were getting there, and unfortunately it failed. Now when it fails, it opens up the level below. Now what are we seeing now? Very good work. If we get a bit of a retest here, this is opening up the 69,800 mark. If we go further, that's opening up the level just slightly above, well around 70.30 or 300. So this is pretty positive, but also bear in mind that if it fails, this area has caught price before, so we could get some consolidation. But as the CPI is coming out very shortly, the CPI is a market report that can literally move markets. We often see weakness followed by strength, or strength followed by weakness. So just be aware, things could go all over the place, but they will always be caught by structural levels. Masterclass students and Level 1 and Level 2 certified students, you will see that we've had a cut under here. That places the market in a negative bias. So we would anticipate turbulence to the negative side. But that's not such a bad thing because we're just going to do a bit of an examination on what turbulence is and what you can expect. For the sake of this exercise, we're just going to start back here, and I'll just take you through what you can expect when you see a bit of a turn down in market action. What you can see here is we came down a certain percentage, and we nearly retraced 50% of that. What about this particular time we came down? It was nearly 100% retracement. What about this one? This is what I'm trying to explain. When you get a negative price, it doesn't mean it's going to go down and down forever. What it means is that over time, it will in fact retrace. And you can see that move was nearly fully retraced right there. And what about this area here? So when you look at a pullback, always know the price is moving in a wave, and that's what it always does. What about here? We got that retracement to there. Not bad, 75% retracement, and you can do it on a smaller time frame as well. You can look at that, not bad as well. So just bear in mind that even though the market is coming down, it doesn't mean that it can't retrace at least half of that move. So it's pretty cool stuff. When you think about it, this means that if you get really, really excited and say, oh no, I've got to sell on this red, that may not be the wisest thing on earth to do. What you will find is your profitability is inherently connected to your emotional control. There's a very strong relationship between your profit and your fear. I've just drawn two lines here. A line that is line B and a line that is line A. Please let me know in the comments, which do you think is the correct line? And we'll go over this in the next video. Is it line A or line B? Now, what does it actually mean? Line A would say when you have no fear or very little fear, you have very little profit. And the more fearful you get, the more money that you make. And line B says something completely opposite to that. It says when you have very, very little fear, you can make a lot of money. But if you have a lot of fear, you're going to make only a tiny bit of money. Which line do you think is correct? You can simply type in A or B, whatever you think is correct. And another thing that would be really, really good for you to comment on, when you think of a retracement, when you think things go negative, do you think that they can't come up? Or do you think that they will just go down and down and down, but never recover? Or do you think that it actually, when price goes down, that's an absolutely brilliant opportunity to go long at spot and not to short? I'm really looking forward to your thoughts. When you understand the interplay of structural levels on price, how they capture price, how they flatline it, how they prevent price appreciation from going to the moon, how it changes everything inside market structure, it is absolutely a game changer. Also be aware that when you have a lot of negative air underneath and you have lighter level structural support levels, and the heavier ones are the better ones, unless they're lighter and more congregated. But just knowing these things is a total shift in how people think. You want to think from an institutional perspective. That is, look at total first, then look at Bitcoin, and then look at your beloved alt. And if you're really good, you will be looking at Forex and also the indices. I covered how I look at the markets in the video for the CTKSMethod service for this month. The service just produces these lines so you don't have to do it. It saves hundreds of hours. As we head into the halving, negative price action is really normal. A lot of people just get caught in narratives. You don't want to get caught in a narrative. You want to get caught in profitability. And also, one thing to note, there is a strictly limited supply of Bitcoin and the institutions want it, but it doesn't mean the institutions are going to pay top dollar for it. Overall, the structure of crypto and the structure of Bitcoin is looking quite good. I would suggest treating these buy opportunities as a gift because they will be in time. So many people base their decision on a simple fact. Is it going up or is it going down? If it's going down, oh, that's bad. I shouldn't touch it. But if it's going gangbusters, I should get in at all costs, which typically costs all. And you can already see how Ethereum was coming up in the last session and literally retraced just about all of it, because if you have the charts and you're marking up ETH with your level 1 and level 2 standard certification, you will know that there was a bucket of structural overhead resistance. Of course ETH backed off. All you literally have to remember is that CTKS structure determines the price waves that you see in any specific chart. Here we're looking at the Tier 1 charts, the Tier 2 charts, and the Tier 3 charts. All have been marked up inside the service, and the video is now available. And you should see the price paths for the up case, the neutral case, and the down case towards the end of the month. Also, you get all of the Tier 1, 2, and 3 trading view indicators and that video explanation out as to how to read structure. And if you would like the trading view indicators, just pop across to CTKSMethod.org. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.